Hey everyone, Mortgage Nerd here. So the conversation of the Fed fund rate being cut is going to heat up again. Why? Because unemployment went up to 4.1. It was as low as 3.4 last year in 2023, and it's gone up to 4.1%. And inflation is slowly moving down again, even though the first 4 months of this year of 2024, inflation was ticking up, which caused our mortgage rates to go back up. And people start to second guess, is the Fed going to lower the Fed fund rate? I think at this point, if things continue in this direction, if they don't, everything changes. But if inflation and unemployment continue this direction, the Fed is going to lower their Fed fund rate probably in September the first time, maybe about 0.25%. So let's say that happens. Everyone's going to come out and say, oh, mortgage rates are coming down. But the reality is that the Fed rate is oranges and the mortgage rates are apples. So they're both round, they're both fruit, right? They're both interest rates. They both go up and down, but they're not the same. They taste different. You got to peel one to get into it. All this other stuff. They grow differently in different places, just like mortgage rates and the Fed fund rate. Fed fund rate does not directly control mortgage rates. People are going to argue something. Oh, of course they do. No, they can influence the mortgage rates, but the mortgage rates go up and down independently of the Fed fund rate. Mortgage rates have gone up and have gone down. They've gone up to the 8s, and they've gone from the 8s down to the 6s, and from the 6s up to the 7s, and now back down to the 6s. All of this has happened while the Fed fund rate was flat. So how can anyone that knows what they're talking about, which most people don't know what they're talking about, say that they are related? No, they are not related. They're as related as apples and oranges. They're both fruits. Again, I can go through those stupid analogies again, but they are not connected. When the Fed announces they're going to lower the Fed fund rate, mortgage rates will drop because they're happy. The bond market is happy. Yay, they're going to drop the Fed fund rate. This is good. But mortgage rates have already been going down. So yes, there will be times where they'll be both correlated and times when they're not. So when you hear the Fed come out to announce this, know that mortgage rates have probably already been going down. And when the Fed fund rate starts to go down, mortgage rates will continue to go down because they're happy that Fed fund is dropping their rates. So if you're looking to buy, just get in already. Stop waiting for this. I think when the Fed announces that, the madness is going to start. Everybody's going to come in off the sidelines. And when they drop it a second time, it's going to get worse. And the third time, it's going to get worse because everyone thinks that they're all apples, not that they're apples and oranges. Mortgage Nerd out.